Do you know what a credit score is and why it's imperative to understand it? Well, if you're scratching your head, don't worry, you are not alone. Today, we're going to delve into the world of credit scores, what they are, and how they're calculated, and why they hold such importance in our financial lives. A credit score, in simple terms, is a numerical expression on a level analysis of a person's credit files. It represents the credit worthiness of an individual. Think of it as a financial report card where lenders, landlords, and sometimes even employers take a peek to see how responsible you are with your credit. Now, you might wonder, how is this score calculated? The calculation of a credit score is not as complicated as it may seem. It's made up of five main components: payment history, amounts owed, length of credit history, new credit, and types of credit used. Let's start with payment history. It makes up 35% of your score. It shows whether you've paid your credit accounts on time. Missed payments, defaults, and judgments have a negative effect on this part of your score. Next up, we have amounts owed, which counts for about 30% of your score. This isn't about how much money you owe, but how much of your available credit you are using. Lenders don't like it when borrowers are close to maxing out their credit limits. The length of your credit history makes up 15% of your score. It considers the age of your oldest account, the age of your newest account, and the average of all your accounts. New credit, making up 10%, looks at how many new accounts you have. It considers how many new accounts you've applied for recently and when the last time you opened a new account. Lastly, the types of credit used, which also counts for about 10%, it considers what types of credits you have. Do you only have credit cards, or do you also have home loans, car loans, or personal loans? Why is all this important? A good credit score can open doors to favorable interest rates on loans, credit cards, and more. It can make the difference between getting approved or denied for that loan you need. It's a key factor in determining whether you qualify for a home loan, how much you can borrow, and what interest you pay. In summary, a credit score is a financial tool that allows lenders to gauge your credit worthiness. It's calculated based on your payment history, amounts owed, length of credit history, new credit, and types of credit used. Maintaining a good credit score is critical for your financial health and can influence your ability to borrow money and interest rates you pay. So the next time you swipe that credit card or think about taking out a new loan, remember the impact it could have on your credit score. It's not just a number, it's a reflection of your financial responsibility.